Hi everyone, welcome to today's video. So the US Fed is currently undertaking a meeting and a lot of commentators are saying that they are going to increase the interest rate by 75 basis points. Some economists are saying that Feds are going to increase the interest rate by 100 basis points or 150 basis points. And as a result, from last Friday, the Indian markets have started to fall. Now, there are two important points here. So the first important point is that if you actually study the fall, the total market has fallen by roughly 3%. And from Monday onwards, it has made a little bit of recovery and it has recovered by almost 1.5%. So the point that I'm trying to tell you is that if this interest rate hike issue was such a big issue, then the markets would have fallen more, but they have not fallen that much. So this is point number one. Point number two is an optimistic scenario. So let's assume that the markets have fallen and now they have made a base. That is that further fall is unlikely to happen or a lot of further fall is unlikely to happen. Then it means that this interest rate hike issue is not going to impact the market. Then it is very likely that markets from this point on might actually give a breakout and will start a new bull run, or might trade a little bit sideways and then will give a bull run in the subsequent stage. One great way of studying this topic is to analyze what FIIs and DIIs are buying in this market or check some of their recent investments. So on this video, I'm going to speak about few key Indian stocks where FIIs and DIIs are increasing their holding. This does not mean that you have to go and purchase these stocks. I have deliberately picked different types of stocks where I will give you different narratives how this FII DII buying can be manipulated a little bit. That can prove disastrous for retail investors. So you need to be on a lookout. Also, do check out some of my favorite small cases in the comment box. These are some of the stocks that I'm bullish about. So I'm linking some of my favorite small cases and you can get access to it, especially if you're a beginner investor who is just starting out their stock market journey, because you might be able to understand better what theme-based investing is. If you are a beginner investor, then do check out my small cases, because as a beginner, you might not have a lot of idea and it might be difficult for you to purchase stocks directly. So these small cases are actually managed by professional investors. So okay, let us kickstart our discussion. And the first stock that I'm going to speak about, it is called as Vikas Lifecare. So let me first and foremost show you FII DII buying in this company, and then we will further discuss the remainder of the details. So here you will categorically see that by 2019, this used to have approximately 4.5% investment by FII DII combined. Now it is at 12.5% and the entire stake is by FII only. So does this mean that because FIIs are buying this, you should also go and buy this stock? Okay, so please hold on and understand the fundamentals and business prospects in this company. So let us start from the top and let us first and foremost understand what is it that this company does. So basically this company is kind of a conglomerate and they make money by undertaking business across different functions and spectrums. For example, these are its 5 prominent functional areas where the company is operational, and the company currently calls itself as a polymer manufacturing company. But over time they have expanded into FMCG. They are trying to cultivate more of their cashew trading division. So just to help you understand the revenue split, take a look at this. So you will see trading division agro, they are making majority of their revenues from this particular division. Also, if you study the profit percentages that it is making from each of its division, it varies widely. For example, their profit margins from the polymer business is fairly high, but when it comes to agro or infra based businesses, they are making less money. So this is point number one. I hope you got an understanding what the company exactly does. Mostly it is into polymer manufacturing, but it is expanding to different functional areas as well. For example, cashew trading, FMCG, infrastructure, etc. So you'll say that, hey, this is a confusing business. Okay, I agree. Let's move on to point 2 because it is going to get even more confusing. So this is where the company is looking to expand now. So what you will see is that they have started a smart product business division. And for this, they have gone and acquired a company called as Genesis Gas Solution Private Limited. And through this, they are getting into smart metering solutions for gases. They might expand into electricity meter subsequent, but as of now, they are trying to expand their base in the gas metering solution. So they are trying to manufacture and sell meters. So this is the slightly futuristic plan. But if you study this year's business lines that the company currently runs, they are into recycling material also. They are into steel and steel bar fittings also. They are into food grade piping also. So to cut the long story short, they are trying to become mini Adanis. So that is what is happening with the company. Is it confusing? I don't know, but yes, it looks like that the company has a lot of products at play. The company is trying to enter a lot of areas and businesses. Now you might retort that, hey, you are speaking negatively about the company. but the company is doing a lot of wonderful work. So let me highlight some of the wonderful work of the company also. For example, they have won an export order of 2700 megatons very recently. They have launched a series of new businesses as we earlier spoke about. They have gone and expanded their fixed capacity. For example, they are buying land across Rajasthan, Haryana, Delhi, and a lot of other locations. So this shows the ambition of the company. And on top of that, they are using their capital to acquire more and more companies. For example, they have recently acquired 22% stake in a company called as Advik Laboratories. So this is about the basics of the company. Now let us very quickly analyze the financials and balance sheet of the company and see where the company stands. So very quickly, if you take a look at the sales growth of the company, it has been fairly inconsistent as of now. For example, you will see that some years the company expanded its sales, then it shrank quite a bit, then it expanded very aggressively. Then if you take a look at net profits, then the company turned profitable, so to say, in the last 1 year. If you just study the company size, you will see that, hey, this is like a micro cap company, only 650 crore company, but the debt to equity is very small and they are expanding their capacity quite aggressively. So since this is a high growth company, so therefore a lot of FIIs are flocking towards this company. So let us go back to investors once and I will show you something very interesting here. So if you take a look at FIIs and if you click on this tab, what you will notice is what type of FIIs have purchased stake in it. For example, if you go to Forbes EMF, what other investments does Forbes EMF has? These are the investments, and you will see that again, these are all very small cap, micro cap companies. So this is one. What about Nomura Singapore Limited ODI? This is not Nomura, the multinational giant that we know. This is Nomura, some other company whose name has been played with, so to say. So here, if you go again, you will see that, hey, all these companies are small cap, micro cap type of companies. So you should become a little bit suspicious. If you go to AG Dynamic Fund Limited, you will see again that same trend playing out. So the important message that I'm trying to give you is that many a times we just assume that since FIIs are buying a growth company, it is a great time for us retail investors to jump into such stocks. You should be a little bit careful about the background of those FIIs as well. If good FIIs are purchasing that company, then of course, go ahead and invest your money. Probably that might be the right bet. But if you are seeing these type of FIIs making investments, you need to do further study. So what other points can you learn from investment holding? So you will see that promoters have been constantly decreasing their holding. This is not a great sign at all. And right now the promoter holding is only 13.31%. You will see some of these HNIs used to have some bit of holding, but majority of them have moved away. They have also sold their holding. So to me, this looks like a risky proposition. Now let me draw your attention to second negative point about the company. So right now, as you would have understood when I was speaking about the overview of the company, that it runs a series of business. When any company runs so many businesses and is expanding that aggressively, it might not become the next Adani, especially when the promoters themselves are cutting their holding. Now, this is an interesting question, that as to why do you think that promoters are cutting their holding and at the same time they are expanding their company also? I don't have a good answer there, but what I can talk about is that I can help you understand their balance sheet a little bit more. So if you take a look at this particular graphic, what you will see is that the operating profit margin of this company is very low, and that could be one of the reasons why that the company has no other option but to expand to other different industries where the profit margins are high. So they are not operating from a position of strength that, you know what, we are doing wonderfully well in FMCG, now we will go to agriculture sector, or we are doing wonderfully well in polymer manufacturing, therefore we will go into the steel sector. They are just randomly experimenting. That is the viewpoint that I can understand from this. So should you invest? Should you not invest? I have given you the pros and cons. The pro of the company is that, hey, it is expanding. It is expanding to new areas. It is experimenting. Some no-name FIIs have invested in the company. So who knows, maybe it will become the next big thing, especially given the fact it's a micro-cap company. But all these promises comes with a lot of negative. So I will leave the discussion here and I will move to stock number 2. So the second stock is called as Kajaria Ceramics. And let me first and foremost show you the investor holding, whether FIIs, DIIs are increasing their holding or not. And what you will notice is that back in 2019, the total FII DII holding was roughly 36%. And now it is close to 42%. On top of that, if you expand upon this FII field, you will see some really good, strong names here. For example, the Small Cap World Fund invests in really good companies. So you can click here and see which companies Small Cap Fund has invested in. So for example, Max Healthcare, it's a fairly big company. Another company is IIFL, which is a big company. Even Embassy REITs is very big. Anyways, this is not a very small FII. That is what I was trying to say. Similarly, you can take a look at JP Morgan, Goldman Sachs, Kotak Funds, all big names. And in conjunction with that, what you will notice is that the promoter holding has stayed intact. It's not as if that promoters are cutting their stake and going away. On top of that, DIIs have also increased their holding. So both FIIs, DIIs have increased their holding, promoters not cutting their holding. So is it a great sign? Yes, from a shareholding point of view, this is a great sign. There is no worry in the company from a shareholding point of view. Now, let me very quickly help you understand the business prospects of the company and what is it that the company does. So basically, the company is into tile manufacturing and 90% of its revenues comes from manufacturing of tiles and other from home decors and items like that. It basically manufactures 3 types of tiles and the demand of all 3 types of tiles in India are fairly high. So there is no problem in terms of the current demand for tiles in India. Now, on top of that, one interesting bit that I want to show you about the company is its own manufacturing capability. So over time, this number has been going up and currently the company manufactures 53% of its own products. So which is a fairly high number for any company. Now, one of the biggest positives of the company is its healthy balance sheet. For example, if you take a look at the sales number, these have been fairly growing. The growth has been slow, but the revenues are growing. So there is no problem in terms of revenues. So this is one. Profitability is also there, that the company is able to get profits. No issues there. But yes, what you will notice is that the profits are somewhat stagnating. You will hardly see any major change from 2016 onwards in terms of its overall profits. So the profits and revenue growth of this company is fairly slow. So now let me very quickly touch upon the pros and cons of the company in a bullet point format. So number one, the market share of Kajaria ceramics, it is growing. For example, you can see this from the chart that back in 2019, it used to control 10% of tiles market in India. And right now it is controlling roughly 15%. So which is a fairly high number and their market share is growing. So this is a definite positive news. Second key positive, as I earlier outlined, that it controls almost 50% of its manufacturing on its own. So its operating profit margins are likely to improve going forward in the future. Now, third key point is an operation matrix, which shows that what is the capacity utilization. Capacity utilization means that if one factory has the maximum potential to produce only 100 tiles in 1 year, then how many tiles is it producing? So here they are producing approximately 77 tiles, which is not bad at all. So in the manufacturing sector, if the capacity utilization is more than 75%, it is considered to be a fairly healthy utilization rate. So which means that if the company further expands upon its fixed asset, then it is likely that it will be able to produce even more material going forward. Now, another key positive about the company was its shareholding pattern, as we had earlier spoken about, that the promoters are not selling their holding, which is good news. Final positive point that I see is the rebound in the real estate sector. So if you check this particular graphic, you will see that there is a very strong relationship between something like Kajaria ceramics and the real estate sector growth in India. So whenever the real estate sector improves, then just after that, the prospects of Kajaria ceramics improves. So since the real estate sector is in an upswing right now, so it is very likely that Kajaria ceramics is going to give an up move. So these are positives. So let me speak about a few negatives about the company as well. So first key negative is that this is a slow growth industry. Now here is a snippet from their con call, and this is the statement from the management of the team. And they categorically said that the domestic market is unlikely to grow by more than 5 to 6%. So this is the first challenge, and it aligns with all the numbers that we were earlier speaking about, that why the growth rate of revenues and profit is slow in this industry, probably because the industry growth rate itself is very, very slow. Now on top of that, the input cost for Kajaria ceramics has gone up. For example, here is one of the prime input resources that they use, which is gas, and the gas cost itself has gone up from 34 rupees to 69 rupees. So this is a major increase in input cost. Now on top of that, the company does not seem to have major branding power. For example, this is the total price increase that they have undertaken very recently. So this becomes like a little bit of a dicey situation if you are a retail investor. If you are purchasing these type of stocks at very high premium prices, then you might get stuck with these type of stocks for a very long period of time, because these companies have very limited pricing power. And if you get stuck in an overpriced zone, then you might struggle exiting the stock. Now, the final negative from my side has to do with the nature of the product itself. For example, think about it this way, that tiles are replaced every 5 to 6 years max in any home, and maybe even not 5 to 6 years. So this is a type of a product that has a very low replaceability, that once people buy tiles, it is not like Asian paints that you will paint your house at least 3 to 4 years. but tiles you might not replace even for 20 years. So this is the reason why company is trying to build big stores now, where they want to sell the entire concept, an entire housing concept on how to put tiles in your house and all that stuff, rather than selling individual packs of tiles. So their idea is that if we build these concept stores, people will come and they will buy tiles for their entire house, and at least we will get some kind of big business. But this requires massive amount of capital infusion. So here is the technical chart pattern for Kajaria ceramic, and unless you get this stock at this price zone, there is very limited point in entering into the stock. This is my opinion. Of course, I can be wrong, but this is what I'm going to do. But overall, this is a good stock. The only problem that the company is facing is that it has no pricing power. The nature of the product is such that it is not going to grow its sales or profits at an exponential pace. So be a little bit thoughtful before taking positions in it. Don't just jump into the stock because FIIs and DIIs are buying this company. So let us speak about the final stock, which is Max Healthcare, and let me take you to investor shareholding first and foremost. And you will see that FIIs are increasing their holding, DIIs are increasing their holding, promoters have cut down their holding. In this instance, there is an important aspect that you need to consider. What you will see is that the pledged promoter holding is 51.2. What does pledged promoter holding means? Let me give you a very quick understanding of that. Pledged promoter holding is very similar to you mortgaging your house. For example, when you need a loan from a bank, what do? You go to the bank, you can mortgage your house, and the bank will give you some money because you have pledged your house. Now, why will you mortgage your house? The most likely option would be that you tried for a bank loan, but the bank did not give you any non-collateralized loan. So you had to go and mortgage your house. So similarly, in the stock market, if a company is unable to raise more and more money, then one of the options that promoters can do is that they can go and pledge the stock. Is it always a bad thing? The answer is no, that this is not always a bad thing, because if the money that they are getting, they can utilize it for good purposes to expand the company, then it might be an okay situation to pledge the shares. But if the company is pledging its shares to meet its everyday expenses, it is going bankrupt, it is getting no cash flows, the revenues are not growing, profits are not growing, then it's a very worrisome sign. So let me very quickly discuss what Max Healthcare actually does and what does its financials look like. So if you take a look at this snippet, you will see that majority of the revenues for Max Healthcare comes from healthcare services, and very little revenue comes from its pharma-based services. You might have seen a lot of pharma stores run by Max. You might have also seen Max Hospital. So these are its two prominent business lines. Now, what about the balance sheet of the company? So if you take a look, what you will notice is that the business has been growing, and the business has grown quite aggressively after 2020 COVID, and even the profits have started to come. Now, there are three key advantages that I see with the stock. So the first key advantage is that a lot of healthcare-based tourism is coming to India, and India is quickly becoming one of the best healthcare tourist destination in the world. So companies like Max Healthcare, Fortis Hospital, they are going to benefit a lot through this trend. Second key point, and you can understand this from the balance sheet, that the company is undertaking a lot of fixed asset capacity expansion. So you can see that the last 2 years have been very productive in terms of expanding their capacity. They have gone and acquired a lot of new land. They are building a lot of buildings, whatnot. So all this is going to translate into better profits, revenues, hopefully in the coming years. Now, third and finally are operations related dynamics. For example, you can see that the average daily revenue per occupied bed is going up. It simply means that the company is becoming more and more profitable. It might be bad for the patients, unfortunately, but for the company, that is good. So that is the unfortunate reality. Again, if you take a look at hospital occupancy rate, this is close to 75%. So this again is a healthy number, which indicates to the point of view that as the company undertakes and expands upon its capacity, it might be able to service more clients, because probably their marketing is already very good. They are getting a lot of people to anyways come to their hospitals. So capacity expansion under such companies make a lot of sense. Now, what are the negatives of the company? So as we earlier discussed, that promoter holding is pledged, which is not a great sign. Second key problematic scenario is that the lead promoter in the company has been selling their stocks. For example, Kayak Investments Holding Private Limited has been selling their stocks. But if the lead promoter is selling their stocks, it does not instill confidence. But my assessment here would be that this is not an alarming sign. So what would be my verdict on the stock? My verdict on the stock would be that if I'm getting this stock at a very reasonable price, I would buy it. But as of now, this stock is way up its 200-day moving average. But yes, if this stock falls to somewhere around 380 levels, I would definitely taking some positions in this stock. Now, there is a quick homework for all of you. I will state two companies. Please go and check the recent moves in the investor holding of FIIs and DIIs in these companies and tell me whether it is a positive sign or negative sign. So the two companies are, one is India Energy Exchange and second is Khare Ratings. Do let me know about your answers in the comment box, and I will see you the next time.